Welcome to Technical Tuesday. This is Fred Razak, Senior Trading Strategist here at CMTrading. And today we're going to continue our series on technical analysis, the basics of it. And we're going to build on some of the concepts that we spoke about last week. But before we start, make sure to like, subscribe, and especially if you find value in this presentation, share with like-minded people who are looking to trade the financial markets. Okay, so let's just jump straight into it and do a little bit of a recap. Last week we spoke about support and resistance and how they're the building blocks of the technicality of why we presume something will bounce off a certain level. Now today we're going to extend that and we're going to talk about trends. Now, we used to have a mantra on our trading desk that we used to always hear all the time. Don't fight the trend. The trend is your friend. And if the trend is your friend, don't fight the trend. You know, we used to say this maybe 50 times. I hear it at night sometimes when I'm sleeping. And I can see the guys that used to say it. I'm talking about 25 years ago. And it's a really important element of the fundamentals of technical analysis. I can't emphasize it enough. Now, you'd say this is really arbitrary, but it's not, because in anything that we do in life, since we as a society, since we as the human race is trading the financial markets, we kind of operate as trends. No one could deny the fact that real estate is now going down as there are trending downwards. Why? Well, because of interest rates being so high. So that's a trend that is happening in the markets. Now, once interest rates start going lower, well, then the real estate market's going to start picking up again, right? Buyers are going to be more inclined to start investing or buying houses because they've been sitting on the sidelines for so long because the interest rates are so high. So this is going to spur a trend upwards, okay? So there's two types of trends predominantly. There's what we call the uptrend, which I just spoke about, okay? When something is going higher, okay? And then there's the downtrend. Now here's the thing. When we draw trend lines, okay, this is the first time I'm using that word, trend lines, we are basically just connecting 2 points on a chart and then extending it to the third point as your confirmation and then using that line as a future support or a resistance, depending on type of trend line that you're drawing, into the future. Okay, now I'm speaking quite esoterically and a little bit abstract, but let's take a look at it practically. Okay, so here is a regular chart. Now, I don't really care what's happening before this first move, okay? It really doesn't make a difference before this first move what has happened in the market. I'm just looking and just observing right now. There's nothing in the market that's happening. I'm not doing any trades at this stage, okay? I'm just observing. Now, there's a upward momentum and then there's a retracement. Then it continues further higher. Now, this line, this is where it becomes very important. This line is higher than the previous high, okay? It always has to be. Now the next line, at the next retracement, no matter what happens, it could retrace a little bit, it could, you know, all this type. When it's finished retracing, its low still has to be higher than the previous high. That's a very important element. That's number 2. Number 3, that third extension, okay, should be higher than my previous high. Now I am kind of getting into the momentum of saying, hey, this is developing into a uptrend. Now it hasn't confirmed it for me. I need the third point. Now when it retraces, it's still higher than that previous high, okay? It's still showing me some strength on the upside, right? And then I could draw my support trend line, okay? Now this support trend line has 3 aces here. That's what I'm looking for. Now the number 3 in technical trading is super important. Now those of you who have attended my webinars or have attended previous sessions that I've spoken about trend lines or anything in technical analysis, the number 3 comes up often. And it's a very important number because 2 is arbitrary, 1 is nothing, okay? And then the third one kind of solidifies, kind of confirms that we are having a trend line develop. And that third line is really my entry point. Up until that point, I'm just observing. I'm not jumping into it. You may want to get into small, okay, as we spoke about the tiering system, as you trying to get into the trade and build that trade and kind of see and, you know, gauge for yourself about what the levels is. If you want to remember it that way, that's cool. But you're not trading up until this point, until you get this confirmation. At that point, you're buying it. And then that extension is where you're really taking advantage of the market. Remember, trading the financial markets is not a guessing game. It's not a game of just, taking your shot and saying good luck. It's actually a fortified, systematic session of going and looking at when trends are actually developing in the early stages. Now, this is happening really early because this could still extend much higher. Now, it doesn't break the trend until it breaks this line, until it breaks this upwards trend line. If it honors it the entire time, then it's still a confirmed uptrend. Now, you could say, okay, now it could be an uptrend for a day, for maybe a week, for a month, for a year, okay? It depends on the time frame that you're looking to trade it, but it needs to be honored. And really, even if it dips a little bit below, but it closes above it, it's still honoring the trend line. And this is what we're talking about many people asking me about entry points and exit points. This is it. This is just simple 101 trading, and you could see it many times. I mean, right now, the date is August 29, 2023. If you look, just last month with gold, it was a perfect downwards trend every single time. Now, a downwards trend is actually drawn very differently than an uptrend. It's drawn on the upper level. Okay, so every time it goes down, every time it bounces, as long as it's making a lower high, okay? Because remember, the definition of a uptrend is higher highs and higher lows. The definition of a downtrend is lower highs, lower lows. So my trend line in a downwards trend is the opposite. It's drawn on the top of the trend in order to develop that trend line. Thank you for joining us for Technical Tuesdays. We'll see you here next week.